in 5, 4, 3, 2.
Hey everybody, Tom Gentile. I want to welcome you once again to another Monday. Glad to have you hanging out here with me. Oh gosh, Monday, November 29th. We are at the end of another month. Going to be heading into December here before we know it. Last month of the year. Can't hold anything back. Cannot hold anything back at all. Again, glad to see you guys hanging out with me here. This is what we got going on today. Number one, I want to talk about my money calendar for the month of December. I want to talk about Intel and why Intel. I want to talk about what's cheap and what's expensive. And I also want to end on a little bit of crypto news for you as well. I do have crypto going on at 1 p.m. later today for those that want to join me. But we got so much to cover here today in this session. Hello, good morning to everybody. Teresa and Mike, always here, always glad to see you. I hope all you had a great Thanksgiving 3 to 4 day holiday. It was a 4-day holiday if you just simply shut everything down on Thursday and then rebooted this morning. However, those of you that popped in on Friday and saw the markets down, I got a question. If you're here or if you're at the, if you're hanging out with us on the YouTube channel, here's my question for you. My question is this: how many of you traded on Friday? How many of you found opportunities on Friday? All right. And I guess I should also ask, how many of you did something stupid on Friday? Like you saw the markets going down and you thought, uh-oh, it's over. We're done. We're heading lower. Or anybody in here that's watching me, regardless of the channel? What did you do on Friday? All right. I'll tell you what. You tell me yours, and I'll tell you mine. All right. Moose made $500 on Friday. Bought some dip. David, I bought some dip too. I'll talk about that in just a moment too. Wow, good job, Mark. I'm just watching with something. Oh, nice. Matthew, great job on that Apple trade. Awesome. I see a lot of you did very well with your ideas. Guys, Friday, there's definitely a pattern on Friday after Thanksgiving. Let me tell you what the pattern is that I see. All right. The pattern is not that it goes up or not that it goes down, because it will do either of those when you give it the longest time looking back. The pattern on Friday is that there is a lot less traders out there trading. That means there is a thin market, and that means that the market can tend to bump up or bump down quite a bit. Either of those directions typically results in higher than normal volatility, higher than normal option premium, which means if you're me, you're looking for something to sell on Friday. You're looking to sell puts, you're looking to sell calls, or maybe you're looking to sell both. So what did I do on Friday? Because I see a lot of you in here talking a good bit about different things that you did. Let me tell you what I did. I sold premium on Google. I sold premium on Apple. I sold premium on, I'm trying to remember. Did I do it on Tesla? Alibaba, I sold premium on. I was selling premium to anyone that wanted to buy it because of the 2.5% drop. Now, I'm not going to sit here and tell everybody that I came in on Friday and everything was smelling rosy. In fact, I looked at the account, my Schwab account was down 0.5% coming in on Friday. Now, I call that a win, because when the market's down 2.5% and I'm down 0.5%, then to me, that's a win. I'm outpacing the market. But I used Friday as an excuse, if you want to call it that, to sell additional premium because I had, and still do have, a lot of cash, a lot of dry powder sitting there, okay? So I suspect coming into today that I had a turnaround and that now I'm probably up about 0.5% just off the open. I'm going to check on that right now because, because I actually do the mornings with you guys. All right, I missed that opening day. I missed what happens in the morning. All right, so I'm up 0.41%. So some of my stuff is working for me and some of my stuff is not. Overall, again, that's the direction I want to go in. We're going to have losers. We're going to have winners. It's a matter of sticking to your strategy, sticking to your rules. And if you stick to your rules, and if your rules have worked in the past, even though there's no guarantee it's going to happen in the future, that's the rules I'm going to continue to trade in thick or thin. All right, hey, let's get to it. Glad to see a lot of you in here did some stuff on Friday, took advantage of that extra premium, took advantage of the drop in the market, and saw that rebound. And so, very, very good. All right, so let's pop on over. Let's take a look at really before we get into the money counter. I want to talk about the news. This right here just continues to. I mean, this stuff shouldn't shock me anymore. I've been doing this much longer than I haven't, which means I've been involved in the markets, trading, investing for well over half my life. I sometimes wonder, why didn't I start sooner? I'll tell you why I didn't start sooner. I couldn't start sooner. I started trading and investing in my own account at the ripe old age of 21. I couldn't go earlier because my parents would not co-sign on an account for me. So I didn't have the privilege, all right, to do that. But here's what continues to, like I say, it shocks me, but it shouldn't. Look at the news. This is the news. I pulled this right off my phone and I plastered it on the screen so you could see what was coming in late last night, okay, as the S&P was going higher. All right. How low will stocks go? That's the very first part in there. All right. Tom Asprey was the contributor. November 28th, last night. How low will stocks go? All right. There was the cover of the Wall Street Journal right there on Apple News. Asian markets fall in early Monday trading on COVID-19 concerns. Okay. That was Sebastian and Ben that did that article. And then the third one over there says, why the Omicron variant will cause the share market to plunge. That was the Daily Mail Australia. Okay, so let's pick these apart, right? First of all, again, what is the news there? What is the primary? I'm asking you the question, all of you that are here. All right, Monday Morning Live, YouTube, give me an answer right now. What is the primary purpose of these news contributors and these articles? What's the primary purpose out here, guys? Let me know what's going on. All right. What is it? There it is. Sell the news, buy the fear. To fade. Sell. Jim, it's done. Game over. You don't have to text in anymore. Jim said it. And Les said it too. All right. Sell advertising. Clickbait. Exactly. Scared, sell advertising, fear, direct markets, move the market, scare, sell sensationalism. All right, sell papers. Exactly. That's it, guys. All right. And yeah, my hat's on backwards. I am doing my John Nigerian today. All right. If you guys know John Nigerian, he tends to wear his hat backwards. So this is in honor of him. That's it, guys. This is clickbait right here. What am I clicking on? Okay, so let's dive into this. You see the one in the middle? Asian markets fall in early Monday trading on COVID concerns. All right, let's go take a look at, and I'm looking at BTC right now. It's up 3,000 today. It's up 5.5% today, but I want to look at ES. This is the S&P 500 futures markets. Okay, so here is Friday. All right, here is Friday. Here's Friday's big move down. You guys see that? See that big move down that happened on Friday? Okay, so this is Omicron, and we're coming in. This is early in the morning. Okay, here's 6 a.m. We're already way down. I mean, we were above 4,700 on Friday by late Thursday. By Friday morning, we're down to 4,600. S&P is off 100 points Friday. All right, I'm still trying to get over that Thanksgiving turkey coma that I was in from Thursday. You guys all know what I'm talking about, all right? That tryptophan coma that we're in. So I wake up and I look at what's going on, and I had to rub my eyes. In fact, it looks like I rubbed my eyes just recently. But I had to rub my eyes and say, well, what is this real? And then I started looking at it a little bit more, and I'm like, wow, this is, coming into Friday, we saw this, we were really only open from 9:30 to 1. So you had a small opportunity here to sell premium, to take advantage of the drop. And I took advantage of the drop. And of course, we dropped off again from 46.10 down. We dropped 300 Dow points inside of the last, half hour trading. And I was in selling premium. And I think I did sell right there at the end of the day too. But notice what happened. This is Sunday night. Okay, so we're coming off the open Sunday night. And this is, coming into 7 p.m. All right, here's 8 p.m., 9 p.m., 10 p.m., and we're already trading up here above, back to 46.30. Now remember, we went from 45.75. We're already up 50 points on the S&P. We're up 42 right now off that bottom. So I look at this, and then I look at this, and I'm like, what are these guys looking at? All right, that article should have said Asian markets down, but off last week's low from the U.S., because of COVID-19 concerns, okay? These other ones are just opinionated, all right? Again, a pattern trader. Here's something that you need to learn as a pattern trader. The patterns that we see that happen, news patterns. The more they push the same narrative, the less reaction the market's going to give you, all right? We could go back and we could look at bombs, okay? Look at what happened on 9/11, and then looked at anytime we had a terrorist that was screaming the word bomb, it had less and less of a reaction in the market. All right. Same thing with, let's fast forward all the way to COVID. So you got COVID. Well, COVID did the big damage in February and March of 2020. Then every time the word COVID came out that had a negative impact on the markets, it had less and less of a reaction. And we did get a pretty good reaction out of this Friday. It was needed. Did it come on the wrong day? Well, that depends on how you look at it. All right. It came on the wrong day if that wrong day also came with very low volume, very thinly traded, right? But if you were a seller of premium, it came on the absolute right day. That was the right day to be in that, on the sell side of premium. All right. So moving forward. All right. Who was with me this morning? All right. Who was with me this morning on Monday Morning Live? All right. So I did 5 minutes and we talked about Intel. Now, why Intel? Because I got a number of different stocks that I could look at. All right. We could look at a number of different stocks. Take a look at the money calendar here. And you can see this is the last week or the last 2 days of November, and what ushers in the last month of the year, December. So I'm looking at this week, and I see mostly bullishness, but there's a lot of yellow on the screen. Do you see that? Lots of yellow. When I look at the screen, I see the yellow out there, and what the yellow is telling me is that we're not just seeing a bunch of bullishness. It's not the same environment we were seeing last month. Okay. Look here, 92% bullish today. But then by the time we get to Wednesday, we flipped. There are more bearish opportunities than there are bullish. Okay, we go to 59.41 on Thursday and back to 72% bullish on Friday. What I'm telling you is this: December is not this bullish month, right? We said this last month. We said, is there a possibility that, what we've been used to, which is holiday selling that happens on and around Thanksgiving and into Christmas, is this being pushed forward? All right, we started seeing holiday sales coming when? Right before Halloween. So did we pass the majority of the holiday sales? I don't think we have. I mean, there are two types of holiday buyers out there. There are the early birds that go out even before Black Friday. And then there are the procrastinators that no matter what you do, they are buying on the second week of December. They're buying as close to that last shipping day before Christmas as they can. All right. Hey, Ryan, hadn't had a chance to talk to you yet. How was
Hey,
your Thanksgiving?
it was pretty good. It was pretty good. It was eventful. I think we went to like 3 different Thanksgivings between our families. So
Yeah. See, we hosted Thanksgiving here, like we always do. And the pattern is my wife gets all excited about Thanksgiving. And then the excitement fades when she realizes she's the one that's that's in the kitchen. And
yeah,
she's the one that's cooking everything at the same time.
goes away
Italian
real
wife,
quick.
she's got to do it. She wants nobody else around bothering her. And then she's exhausted by the end.
Yeah.
But the silver lining is that she doesn't have to cook for the rest of the weekend. And so, we have leftovers all weekend. We had a lot of folks that came out, that said, "Hey, come on out with us." We went out Saturday night went out for what I like to call that before pre-Omicron outing, because the narrative probably going to change. We're going to start
Oh
hearing
yeah.
the masks are going to come back, and that pattern's going to come in again. I don't
Yep.
think it's going to last that much, but that's what happened with us. Between that, college football, that Auburn Alabama game was great, huh? If you could
Oh yeah.
stomach that, if you had the stamina to sit through 3 overtimes.
I'm a
Tampa
Clemson
Bay
fan,
Bucks
so
have
we
pulled off a win. That was a great game.
yeah yeah.
And what else we had? Black
Uh,
Friday, did a little shopping. Small Business Saturday, did a little shopping. Sunday, did a little shopping. Probably going to look at the last few things on my list for today. Today, Cyber Monday. How about you? Did you do any Christmas shopping?
I got most of mine done actually. I got most of mine done probably a little bit about a month before now. So I've been done for a little while.
Yeah. And the reason I say that is because when you poll most people went out and already did their shopping. And then when I mean going out, I mean they went online. I have not picked up a single thing at a store this year for Christmas. I typically don't. I'm so busy stuck here, and it's tough for me to even find room to get a plumber if I need him. Because I'm online so much. I'm busy looking at the markets, or I'm doing something. I've become a hermit in so much that everything I do right from the desk. Oh, Ryan, I did go out last week, right before Thanksgiving. Got to show you something. Where is it?
Oh.
Where is it? Check this out, my man.
Ooh. Oh,
Now,
that's so cool. Nice.
check. Now, you see that? Tom's Trading Room there.
Mm-hmm.
And then you come around here. Tom's Private Whiskey Reserve. Let me read it to you for a second. I'm going to read a passage from the whiskey. For end of day use only. For winning days, add to your favorite mixer. For losing days, drink straight on the rocks. Please trade and drink responsibly. And there's the TTR logo right there. But
That's pretty cool.
the important thing to note is that some of it's gone.
Oh, did you try a little?
Yeah, for losing days. That was Friday. Drink straight up. All right.
I like that.
But anyway, let me put that back on the shelf. So yeah, so I got a barrel of this stuff, and so I know what a lot of people are going to be getting for Christmas this year. That's for sure. Anyway, money calendar. So you look at the money calendar, and what I'm looking at here is I'm seeing some bearishness, but we really start to tend to get bullish again about midway through the year. All right, or through the month, excuse me. Here's what I think is going to happen. I think the procrastinators are going to push December to new highs, but it's going to be a rocky start here for about a week. And then I think we're going to go in, and we're coming in like a lamb, and we're going out like a lion in December. So that's what I see happening. All right, which brings us to today and brings us to today's trade. So I was talking about Intel, and I showed this particular pattern. The pattern is between now and December 28th. The pattern has given us 10 years of profits, 9 out of 10 years of profits. If you take a look at this at the chart below, you'll see every year, 2011 through 2020, and how the pattern performed. All right, green is good. Green means it worked. Red means it did not work. So 2018, Intel went down during this last month of the year. But every other year it went up. Last year, not so much. But you take a look at last year, here's what ended up happening. We came right out of Thanksgiving, and over the course of about a week and a half, we ran up from 46 to 52. Nice move. You know, when you're talking about getting about a buck on the move over a course of a month, and you end up going 6 points higher, I mean, the trade was over last month, even though you go back and you go, oh, didn't make much. Oh no, it made much. It made much during the first 1/3 of the pattern. Then it filtered off sideways, dropped in, and recovered a little bit to eke out the year-end win. But taking that and turning it into an option trade, all right, that's what we do. And so I pulled this up Friday. So I pulled this up Friday afternoon. And this is where it was on Friday. And we were looking at calls, and I was looking at calls. I actually started looking at this on Wednesday. I'm like, okay, yeah, this is pretty cheap. But what happened between Wednesday and Friday? We saw that big push in volatility. And if I come over and do a little bit of homework here, you'll see what I mean. Let's pop on over and let's take a look at INTC. So Intel, again, Intel does not have a pretty chart. This is not a buy high, sell higher chart. This is a value trade. And I'm looking at this. I actually have full disclosure, I have a lot of short puts in this. Okay. So I have a long-term goal with Intel. I'm going to own some stock on Intel because I have short puts at around that 50 price. I also have some short puts at 47.5. And so that's where I am on this. But when I look at this as a trade on a one-to-one, not on a long-term investment, but as a one-to-one, it looks very interesting when you see that bottom off right there at 47.89. And then we see 52.50, which is the 61% retracement off of the high before earnings to the low 1 week after earnings. So that 52.90 area looks like a very nice reward to risk ratio on the stock. You take a look at the risk and you say to yourself as a trader, if we go below 47.89, I want to get out. But if you take a look and you say, all right, that's 2 points between where we closed at and where we are, right? Really 1 point, 1 point move. But then you go look 1, 2, 3, 4. 4 up to 1 down. That's a 4-to-1 reward to risk ratio on the stock based on Friday's close. Now I want to add one more thing to this because I'm looking at this on Wednesday. I'm like, all right, this looks good. What changed? Well, when I put the overlay up and we look at that 7 to 30-day IV, the IV was down here in the low 20s and jumped to the high 20s in 1 day. That was a big move to go from around 23 to 28. That was a 5-point move in vol. That was a 20% uptick in option premium in 1 day. So we went from buy calls to, wait a second, now I need to look at call spreads. The reason I needed to look at call spreads is because the calls, even if we got that kick up from Intel, all we might be doing, folks, is paying for the extra premium. That's why I looked at call spreads, because of that area right there, that red line spike up that happened. We went from it's going to be a cheap call play to no, it's going to be an IV play. So that's what we looked at with the IV. All right, so from here, it's a matter of looking at the actual options. And I'm just going to skip forward real quick, and I want to share with everybody what I looked at on Friday. So I was looking at a call spread. And a call spread involves buying a lower strike call and selling a higher strike call, all right? And looking to do that, what we pay for that lower strike call. For instance, the 49.50 was what I was looking at. So the 49 was trading for 154. The 50 was trading for $1.10. So I could either pay $1.54 for just the calls, or I can pay $1.54 for the 49 calls and get $1.10 for the 50 calls, and now pay only 43 cents. So I'm going to knock 2/3 off the cost and the risk of this trade, and I'm going to put it into slow-mo. Okay. Slow-mo is that regardless whether the price drifts higher or pops higher, I'm going to get about the same result. This is not a day trade. This is a trade that we're looking at having happen over the next 30 days when you include the weekends. All right, so that's what we're looking at doing. Where's it at right now? Let's go take a look and see. So I'm going to pop on over to Street Smart, and I'm going to type in INTC. And now I want to look at not the stock. I want to look at the call spread. And the call spread that I'm looking at is not the December 3rd, but the December 31st. All right, looking at that 49.50 call spread. Look at this, 47, 43 by 47. I like this at 45. And what we're looking at doing here is, again, buying to open and then insert quantity here. The expiration date, that's the date that I want this trade a minimum before it expires. All right, now I'm looking to get out of this before expiration, but we have December 31st. The 49 calls, why the 49 calls? Because these are the at-the-money calls. These are where we are right now. They're going to be the most liquid of all the calls out there because at-the-money typically has the most liquidity. I'm going to sell one strike above, 50. Why sell the 50s? Because I'm looking for roughly a 1-point move in this stock between now and what I mean by 1-point move is I think it's going to jag back and forth over the next 20 to 30 days, and we're going to see it 1 point or maybe 2 points higher before we get to the end of the year. And then it's just a matter of, okay, well, if this is where we are today and this is your target, what do you expect to get out of this? Well, if I can get 45 cents, then my expectations is that it could go as high as $1 because you take a look at the difference between strikes. That's the highest it could go. This can widen out to be $1. If you pay 45 cents for something that's worth $1, you have a 55-cent profit. Now, in what world does Intel need to be in if you buy the stock for it to double, for you to have a 100% return? Well, if you're buying Intel at 50, let's just call it 50. It's got to go to 100 before you double your money. With this trade, if all we got to do is be above 50 in 30 days, and our 45-cent trade goes up to above 90 cents, okay, therefore we have a potential double here. A potential double with just a 1-point move in the stock. To me, that's how you create these low risk and high return on investment trades. It's just very, very simple. I'm buying low and I'm selling high. I'm buying a lower strike, selling a higher strike. That's what we're doing here. Now, I picked Intel because Intel has one of the lower beta moves when you look at the 325 stocks that I look at. Okay, so there you go. All right, so what else is happening on the money calendar that makes sense? Let's go take a look and see. All right, so what I like to do is I like to look at, we do this every Monday. So today is the 29th. We're going to look at the 29th. I'm going to re-rank this by power meter. And here are, other than Intel, the top 5 stocks that are making the grade right now in terms of, this is bullish and or bearish. All right, I didn't put all the bulls at the top. I rank them by something called power meter. So when I'm looking at this, Chipotle comes at the top. ISRG, TMO, DHR, and Adobe, they round out the top 5. So if you look at them, 4 out of 5 of these have 30-day patterns, and the 5th one has a 29-day pattern, which means we're going into January because these are trading days. Look at the net profit on these guys, $254, $152, $128, $54, and $59. They all have 90% accuracy. They all end in the first week of January. Their last losers were a long way back. All right. And the power meter, which says how trendy are they, are just amazing. Let's take a look at each one of them here real quick. So I'm going to start with Chipotle. Chipotle Mexican Grill has a pattern between now and January 7th. All right. When I look at it, I see that it's averaged over $25 per trade moved during this time frame. Now, here's the problem with Chipotle. Look at that big move down. Do you guys remember 2015 for Chipotle Mexican Grill? All right. Remember, they had to shut down. They had to shut down the stores. Well, that was the result of shutting down your business. But look at the last 5 years. 7, 46, 46, 63, and 133 during the pattern. It's coming into itself. The pattern's just gotten better and better, right? Look at buying the stock. Look at option trades. But if you're going to look at option trades, this is what I do. I look at the call prices of where we are, all right? I look at the target of where we're going, and I say, would the target of where we're going, are my calls likely to increase in value over that time, right? So again, this is an option trader's best friend. The reason I say that is because, when we look at stocks, let me just jump out here to our live streams right now. All right. Good morning, everybody. Hey, Rice, how you doing? Patricia, Mark, Dewey. Good to see you guys all hanging out on the YouTube channel. Let's take a look here over at the live. Let's just go through. Let me see. J&J, mRNA. So John's asking about J&J, but I think it's more of a text. But let's just use J&J as an example, okay? J&J. Is there a pattern in J&J? Don't know. Didn't see one. All right. So if there's no pattern in J&J, is Tom going to trade at J&J? No. But people do trade off of what they think is going to happen. I mean, trading is one of the most emotional things you can do because you know why? You're putting money at risk. And money is emotional for most of us. Not all of us, but most of us. Is money emotional for me? Yeah, it is. Okay, it is. How do you de-emotionalize the concept of money? One of the best ways to do that is to follow a rules-based strategy. Okay? Don't worry so much about what the ticker is. Worry about what the rules tell you. Worry about what your strategies are telling you for buying or selling. That's going to get you through the thick or thin, right? There's people out there right now that bought VIX on Friday, that bought VIX calls or bought UVXY because it popped, right? And guess what? It was all over the news on Friday for 3.5 hours on CNBC. All over the news about how the VIX went up, and oh my gosh, look at Zoom. Zoom is going higher. The stay-at-home trade, which was terrible last week at the beginning of the week, became the place to be at the end of the week. Where's Zoom at right now? I'm saying this and I have no idea, but let's go take a look and see. ZM. Oh, it's down. I didn't know it was down, but you know what? So many people crowded into Zoom on Friday as the stock went extremely high. I mean, we went from 205 all the way up to 237, okay? And then came back down and traded around 224. Where are we at today? 212, back down here at the bottom. Because you know why? Because too many people they crowded into that trade on Friday. They crowded into the VIX on Friday. And now the VIX is handing them UVXY. Take a look at that one. That's down 17% today. Because you know what happened for 3.5 hours? The VIX ran as high as 22 and then started to fall back down. And of course, look where it fell back down. After the markets closed. See all the volume? See no volume? And now, look over here. 22 becomes 17.5. That is emotional trading. We're not in that business, okay? If you're in that business, you're in the wrong channel right now. This is not where you want to be. If you are in the business of trading and you want to be on the right side consistently, not all the time, but consistently, then you want to be in the rules-based sandbox. Come with me, all right? I'm going to tell you, it's boring over here, but boring works. Boring will keep you from doing things you shouldn't be doing. Boring will help you do the things that you should be doing. All right, let's continue on. So back to our trade. all of this trade here. By the way, someone asked, when do you get out of this trade? Oh, that's easy. That's easy when you make money. All right. But it gets a little bit more complicated. So let me explain it to you. So if I put this trade on and I get it for 45, then I'm going to immediately put my sell order in afterwards. I'm going to change a couple things around. Let me show you how I put a sell order in. I'm going to put a sell order in. It looks like this. All right. So what I bought to open, I'm going to sell to close. What I sold to open, I'm going to buy to close. That 49.50. All right. What if I sold it everything at 90 cents of a possible dollar? That way, if it goes up and it hits 90 cents before Christmas, got my Christmas present, got my Christmas came early for Intel. Okay. Now, what if it doesn't go up? What if it goes sideways? When do you get out of the trade? Well, for me, I like this trade all the way up until when? All the way up till when? I showed it to you. Let's go back and look again. All right. All the way until this says December 28th. So I want to be out of it a couple of days before expiration, because if it hasn't gone up and gave me 100% return by then, get out. Get out. The only other time I would get out is if we get a big gap up. If we get a huge, huge move on Intel in one day, and maybe you're only up 50%, then that might be the time to move to the sidelines. Okay. But it all comes back to this chart. This is where I start things. All right. Money calendar Monday. All right. So we started off talking about those 5 stocks. Let's move back to those once again. Those 5 money calendar stocks. The first one was CMG. All right. Let's go back. Let's view the day. Here's the day. The day we're looking at was, November 29th. Let's go back to November 29th again. Okay. Now we'll do the rest of this right here. So ISRG is a 30-day trade that runs from now to January 7th. Okay. Its last loser 9 years ago. TMO, 30-day trade, had a loser 6 years ago. 90% has averaged $12.85 during this time frame. Number 4, DHR. DHR, 90% trade, $5.45. It had a loser 6 years ago, but very powerful trend right now. And our last trade that averaged $5.93 during its pattern was Adobe. So CMG, ISRG, TMO, DHR, ADBE. Those are the 5 that I'm putting on the watch list for all of you this week. You can check those out. We'll see where they are come the end of the year. All right. So that is my money calendar as we head into the final 2 days of November. Okay. Now, again, and I talked about Intel because Intel is the trade that made the most sense to discuss here. But let's go ahead and let's shift gears. Now, I mentioned a couple of things, I think, this morning. Let me make sure I have it here. We talked about leftovers and Small Business Saturday and Super Sunday and football and Cyber Monday. That's today. But the one thing I want to mention to everybody is I said on Friday, in the whole minutia of the long weekend, I said on Friday that I was selling premium. I was selling premium on a couple of FAANG stocks. So let's take a look at some FAANG stocks once again, because I want to show you guys why I did that. Why did I sell FAANG stocks on Friday? Look at my stock list. Okay, real quickly. Here's the S&P. S&P had a pullback. Look what happened to the VIX. This is why I sold premium. When the VIX goes from 12.5 to 22.5 in one day, all of a sudden, everything got super expensive. It was time to sell premium. That's exactly what I did. Okay. And by the way, all the money I was down on Friday, I've got it back. I got it back. And by the way, I took some stop losses on Friday. I had some stop losses got triggered on a couple of my longer term trades. But by selling premium on Friday because of that chart right there, because of that red line right there, I was able to recapture my losses as of right now. And I'm set up to go back to my highs. And so I'm showing you exactly how I do it, guys. This is my playbook. So what else were we looking at? Okay. Here is, and let me bring the latest up because I want to show you what's happened since then. So here's a little bit of a drop on here's a little bit of a drop today. All right. A little bit of a drop here in the VIX, but guess what? We're nowhere near those lows, so it is still a premium selling. I think it's going to be a premium selling week. Now, S&P opened high. We're off those highs. We're still up on the day. We're up big on the day, but we've pulled back a bit. I think it's still going to be a shaky week. I talked about that when we looked at the money calendar, but still, I think the right side of this market is to sell premium. Now, let's move forward. Look at the bond market. I mean, I think we came in the last week with an 80% chance the tapering was that we were going to remove the tapering or lower it drastically. That dropped to a 60% chance after what happened on Friday. So if the variant, the new variant, is mild, has mild symptoms like we first heard about over the weekend, you will see the bond market drop. I think the bond market is one of the best hedges right now against interest rates. Selling this particular market, and you had another opportunity to sell it on Friday. It was a great selling opportunity, although I didn't do it. But today looks like a good day to sell bonds, to buy put spreads in bonds, to sell call spreads in bonds. But to do that because we're in this rut that was taking us from the low 140s to the low 150s. What did we hit on Friday? We were at 150.5 on Friday. All right, back up here near the top area. Now we're in this particular area. This could set up as another selling opportunity for those of you that believe interest rates are going up. This is the side you want. This is the side you want to be on. All right, moving past cash. I mean, we could see cash has been higher against more foreign currencies. That's great. Look at USO. All right. Now, I got to say, what have I been talking about with USO? I've been talking about the fact that we're looking at mean reversion, that I did not believe that I did not go long USO because of the lofty levels it was at. There is a bearish seasonality pattern right now, and the risks were to the downside. Well, the risk to the downside got taken out because we just basically went through a couple of months of gains, and we lost them all inside of a day. Now we're getting a bounce back. Take a look at where the oil market's closed, below 50, and where they opened at 52. So we're already getting at that move back higher in USO, right? Gold is probably the most mysterious asset to trade. I believe that gold will be moving higher. I own GLD, all right? I owned GLD. I also was short some puts last week in GLD. I think I own more GLD now. But the reason I'm bringing this up is that I think gold's going to make this quiet move back up and back above 174.50 for GLD. We will see what ends up happening with this, but it is a longer term move that I'm looking at. All right. Is there a shorter term trading opportunity on GLD? I don't see it yet. All right. We did come down and we did hit that 61.8% retracement. So if you use Fibonacci as a rule for buying, then yes, you just got something. All right. Let's take a look at now. Let's talk about Facebook, which is changing their symbol. They're changing over to become Meta, the Meta universe next week. There's a lot of reasons or a lot of opinions around why they're changing. This is going to be very interesting to me because you know what? People are going to be looking to trade FB on Wednesday. They're not going to see it. And they're not going to figure it out until either the next day or even the next week. But I think FB is going to have, when it changes its stock symbol, it's going to have some volatility in it. It's going to be more thinly traded. And I also believe that that might have some selling opportunities as well in it. Okay. So take a look at what we have here now. Let's move forward and let's look at Apple for a moment. Okay. So notice what happened to Apple. Apple's been moving higher. This is the stock symbol for Apple, 140. All right. This was back in October. We went from 140 to above 160. We had a little bit of a pullback. Nice big move here. Apple's trend is up. If we take the path of least resistance, folks, where does the path of least resistance end with Apple? Higher than 161.94. Okay. You know, a lot of traders are expecting big things from Apple. Investors are expecting big things from Apple. I love the buy the high and sell higher when we look at these charts. One of the easiest things, and I see a couple of guys, out there saying, hey, this is kind of Greek to me. I don't know a lot about Fibonacci trading. Let me let you in on the easiest trading system there is known to man, and that is buy 52-week highs and sell 52-week lows. Because people, for the life of them, can't figure out why when something's high, it keeps going higher, or why when something's low, it keeps going lower. But it happens more often than not. And if you look at Apple, Apple is one of those particular charts where that could happen, right? But this was where I was selling premium. I'm looking at Amazon, which was at $3,200 a share back on the beginning of October. Went as high as $37.50, and then in the course of the last 5 days, we dropped all the way down to $35.02. Here we are today. We are up on Amazon, but not up big. All right. I took advantage of selling premium, but look what happened today. Option premium has gone even higher. So I'm looking at selling puts on Amazon. All right. Because Amazon's not going to stop running trucks. I mean, in fact, as far as I'm concerned, over the next couple of weeks, Amazon's going to be running full tilt into the holiday season. That in itself fundamentally makes Amazon a buy. But when you look at all this implied volatility, guys, Amazon's option premiums have not been this expensive since before their earnings came out last month. That's why I like this. This tells me that you've got increased premium with less day-to-day risk as we had going into earnings. So I like selling premium in this particular stock. All right, so that's Amazon. Take a look at Netflix. Netflix 2 premium levels, you look at that red line. That red line is a barometer of whether I want to buy options or sell them. Last week was an option buying time frame when we were down here in the 20s. All right, we've jumped to the 30s in vol, so it's telling me now more and more people are buying these calls and more people are buying puts, and I want to be on the sell side of this if I find a pattern. Google. Here's another one I'm selling premium in. And the reason I'm selling premium in Google is because Google's options went from, on Thursday, they were at 22.5. On Friday, they were at 28.5. Now, Google's dropped off a little bit, and that's fine. I sold on Friday. If they come down, I make money, right? I'm selling something high to buy it back low or not even buy it back at all, because if it goes to zero, that's the best I can do, okay? So that's Google. So looking at all of these things, they just tell me that there are unique opportunities right now in FAANG stocks. If you like FAANG stocks and you don't want to put the money towards buying FAANG stocks over the holidays, perhaps getting paid to trade. I'll show you guys more of that in detail on Wednesday. This Wednesday, I'm going to talk about getting paid to trade. We'll do it then, and I will explain it in detail, that red line and how I trade that red line. Okay, but let's do this. Let's talk about the most expensive and the least expensive options out there to date. And to do that, I have a gift to give everybody here if you haven't been here yet. Take a look, if you have not done so yet, guys. Go out there and take a look at the iOS, the Apple Store or the Google Play Store. And I want you to type in these three words: Tom's Option Tools. Tom's Option Tools. And do a search on that. You're going to find an app which has a suite of products in it. And in there, you're going to find, well, first of all, download it. Doesn't cost you anything to download. All right. those of you that are members of our software, you can use your username and password. And depending on what you use with us, there are a number of different apps that you can open within the suite. But for all of you, regardless of whether you are a Tom's Option Tools user or not, all right, down at the bottom where it says login, you'll see non-subscriber login. Click there, follow the bouncing ball there, and that'll take you to where you can open and utilize the morning report. The morning report, every morning, we have these 6 lists that come up, and we talk about these lists. These lists are everything from the cheapest options out there, the most expensive options, unusual call and put volume, and high volume and open interest. I try to go through every single one of these between Monday, Tuesday, and Wednesday when I'm here with you for the first hour each and every day. Let's take a look and see what's cheap and what's expensive coming into this morning. And to do that, I've got it on the screen here for you right now. Look at this. You know what the most expensive options were going into Friday? USO. Why? Because USO had one of the biggest drops since COVID, since we first heard of COVID back in 2020. Now, I want you to follow with me here. You have a high, a low, and a current. This is not the stock price of USO. This is the highest these options have traded in the last year in terms of a percentage. This is the lowest that they've traded in terms of a percentage, and this is where they traded it out recently. So when your high and your current are the same, that means that these options are trading at 1-year highs. All right. INMD, same thing. ARGX, highest it's traded in a year. UGA, that's not the University of Georgia, folks. Okay. 5082, 2826, and 5082 last. Tech is on here. SPY. Now, you're not often going to see ETFs like USO, SPY, IWM that show up on here. But when they do, it lets you know that the overall market is trading at 1-year highs in implied volatility. We haven't seen this in a year. It's telling me that I do not want to buy options on just anything, because you're going to be giving money away, regardless of whether you win or lose. You're going to be giving money away, okay? So NVIDIA came up here as well. Now, I'm just going to click on one of these real quick. Let's look at USO. This is a chart of USO. You can see what USO's done. You know, moved up, moved up. Took quite a while to get from, let's call it 50 to 58. Look how long it took. I mean, it took from mid-September to, and we were at mid-November, we were trading at 58. And then even Wednesday, we traded 56. And then all of a sudden, back down to 50. It took one day to erase a month and a half of gains. See the black line? The black line represents the 7 to 140 day options that expire between 7 days to 149 days. Look what that thing did. All of a sudden, all the activity in these options just went sky high. That's why this came up as number 1 on the list. Look at SPY. SPY. The index was moving higher, and SPY traded lower. And SPY is trading down here between 12 and 14, 12 and 14, 13 and a half, and boom, 22. Wow. It's like anybody that was long puts or long straddles on SPY did very well, but this is the time to be a seller. So a couple of takeaways I want to give you here as we head into the last 5 minutes of my program, guys, is that for those of you that are new, okay, today is not a day, and Friday was not a day to buy calls if you thought the market was going to jump up, okay? In fact, if you were aggressive, you were buying stock or you were selling puts if you believed that there was going to be a bump in the market today. But buying calls, a no-no, because the calls got nearly twice as expensive from just the middle of last week. That's how fast they jumped up in value, right? So this expensive list, I either avoid it as an option trader if all I can do is buy options, or if I'm an option trader and can sell, I sell premium. You want to know where the buy premium is? It's on the right-hand side of the screen. Cheap IV. AB, which traded as high as 61.53 and as low as 21.51, well, it clocked in at 24.23. So it's on the low end of the year. DQ, low end of the year. HZNP, all right. AZPN, PODD. AMC, yeah, AMC is cheap. AMC is still expensive, but it's much cheaper than it was in the last year when it had a high of over 530 and the low was 97 and the last was 119. It means that the options are cheaper than they've been. Now, what's the cheapest thing out here? Let's look at AB. AB, Alliance Bernstein. Many of you look at that and say, what is that? I don't know what it is, all right? I don't know everything. I know things when they come up and tell me to trade them. But what I do know about Alliance Bernstein is that the stock, even though it's gone from 50 to 57, and now it's kind of drifted down, it's trading around 54, look at the implied volatility. Look how cheap it's gotten. It's down here near its lows. Even if you take out that spike, it's still near its lows. So if you have a signal on AB, whether bullish or bearish, this list right here tells you these are the cheap options of the bunch to look at. We'll look at the others as we go through, guys. Tomorrow I'll look at unusually high calls, unusually high puts, and then on Wednesday we'll be looking at the high open interest and high option volume as well. But you can get all of this right there on the morning report. And that morning report, once again, it's available. All you have to do is download it. It's Tom's Option Tools, downloadable right on the Apple Store and the Google Play Store. Works on phones, works on tablets, works on iOS, works on an Android. Okay, and it's there for all of you out here to get to look at every single day, absolutely free. Okay, so hey, let's talk about crypto as we round out the rest of the news here. Cryptocurrency. Okay, here's the news. And I'm going to talk more about this at 1 o'clock. I'm going to get into this in very, very big detail as we're going to go through all the crypto charts, and we're going to look at what's happening in terms of how we can spot volatility in crypto. We'll talk about volatility in crypto. But BTC and Ethereum both bounce off of Friday's post-holiday drop, right? For those of you that, got caught in the tryptophan coma, what I mean by that is you had too much turkey, you fell asleep on Thursday, and you woke up again on Sunday. You went, what's going on? What's happening? Well, here's some news for you. The crypto markets dropped big. All right, we saw Bitcoin drop, we saw Ethereum drop, we saw a lot of the altcoins drop. That was not a sell day. Friday was not a day to sell. In fact, I got to give kudos to my son, who, now, you know what? Something about my kids, guys. My kids, yes, they're in the trust, all right? They're in the circle of trust, and they're in the trust. But they don't get stuff given to them, all right? My son works. Listens to, when I hear that my son works, you know what comes? That movie Coming to America. Remember Coming to America, when the king walks in and he sees his son with a plaque that says Employee of the Month, and he goes, "My son works." My son does work. All right, he's got a couple nickels, but not that many nickels to put together. But he invests his money, and guess who he's doing on Friday? And I'm so proud of him. He jumped in and he bought Bitcoin in below 54,000. And he bought Ethereum somewhere near the 4,000 mark. I think it was 40.50. Don't quote me on it. But he bought those things at that level. All right. And I said, "Well, why'd you buy?" He says, "Well, you told me it was a good place to buy." Of course I did. But you know what? I tell you when I spot buying opportunities. But I don't push the button for you. You push the button yourself. And I'm proud of him because he went in and did something a lot of people didn't do. A lot of people couldn't stomach, All right. He went in and bought some Bitcoin. He bought some Ethereum, and we've seen the bounce. All right. Where's the bounce at? Where's it going? We'll talk about that. I did see some darknet contrarian signals. These are contrarian signals increased over the weekend. So, guys, I want to let you know this. 1 o'clock. Join me at 1 o'clock because I'm going to be talking about my current watch list. I'm going to be talking about trades in the cryptocurrency markets. I'm going to be talking about my final winner for the trip to New Zealand, which, by the way, I hear now they're not opening the doors until April 30th. That means they're closing the window even more for 2022. But I've got another winner coming up. All right, we've had 3 winners now. All right, who's going to be the 4th? Join me at 1 o'clock. We'll find out who that 4th winner is and much, much more. All right, guys. Hey, thanks for joining me. Chris is up next. Have a great rest of your day. I'll see you at 1 o'clock. Till then, take care. Bye, everyone.